The greatest trick the financial elite ever played was convincing you that the number on your screen represents reality. It does not. I need you to suspend your belief in the fairy tale of supply and demand, because the free market is officially dead. We now possess the smoking gun, forensic evidence proving that the casino has been rigged against you for decades. But here is the twist that nobody saw coming. The House is no longer rigging the game to suppress the price. For the first time in history, the powers that be are rigging the machine to force the price up. The suppression algorithm is broken, and what is replacing it is a state-sponsored squeeze. We are looking at intelligence regarding a massive institutional whale who has just exposed the fraudulent heart of the bullion banking system. This is not a retail rebellion. This is a sophisticated forensic dismantling of the algorithmic pricing models used to steal your wealth. For years, when the price crashed for no reason, they called it a glitch or a technical error. We now know it was a crime. This investor has analyzed tick-by-tick data to reveal a mechanism called spoofing on an industrial scale. Imagine a bank's supercomputer seeing your buy order milliseconds before it executes, stepping in front of you to buy it cheaper and selling it to you at a markup. They are shaving billions off retirement accounts and funneling it into bonus pools. But the real weapon is the phantom sell order, placing a massive wall of selling pressure to induce panic, only to cancel it the moment you sell your real assets. It is the financial equivalent of screaming fire in a crowded theater to loot the concession stand. However, the manipulation has finally hit a physical wall. You can print infinite paper contracts, but you cannot print the laws of physics. The suppression has worked too well, driving prices so low that mines are shuttering and refiners are running empty. The beach ball they tried to hold underwater has turned into a naval mine, and it is detonating the supply chain. We have received a catastrophic report from Switzerland, the refining capital of the world. A senior executive at a major bullion dealer has gone on record with 3 terrifying words: zero stock available. This is the refining hub of the planet, the piggy bank of the global elite, and they cannot source a single significant delivery. The banks in London and New York are ghosting them. The paper market claims silver is abundant and cheap at $86, but the physical market in the wealthiest country on earth is screaming that silver is extinct. This disconnect is triggering a run of the bank in New York. While Switzerland gathers dust, the American vaults are being raided with a ferocity we have never witnessed. We are in the middle of a traditional non-delivery month, a time when the exchange should be a ghost town. Yet in just 96 hours, nearly 3,000 delivery notices were issued. That is demand for nearly 15 million ounces of physical metal in a week where volume should be zero. This is not trading, this is a raid. Entities are entering the market at AM and demanding physical delivery by AM. They are treating the futures exchange like a grocery store during a hurricane, stripping the shelves bare because they know the warehouse is empty. These new wands are the most dangerous predators the banking cartel has ever faced. They are likely sovereign wealth funds or massive industrial giants like Tesla or Samsung who have realized the supply chain is hollow. They are bypassing the broken refineries and attacking the exchange of last resort. They don't want the cash bribe to roll over their contracts. They want the atoms. They are forcing the banks to scramble, to borrow, and to steal from one vault to pay another. The music is stopping, and these whales just grab thousands of chairs, leaving the banks standing on a trapdoor. But the final nail in the coffin of the free market didn't come from a trader. It came from Washington, D.C. The United States government has watched this raid, analyzed the empty vaults, and realized that allowing the free market to function is now a national security threat. If prices remain suppressed, the mines close, and China captures the strategic resource war. In a move that changes the physics of the economy, the Vice President has just announced the formation of a critical minerals trading bloc. Embedded in this announcement is a concept that is anathema to Wall Street, but salvation to the industry: price floors. The government is effectively nationalizing the pricing mechanism. They have declared that they will not allow the price to drop below the cost of production. They are putting a put option under the entire market. If the banks try to short the price down, the United States and its allies will step in as the buyer of last resort. The down rig is dead. The up rig has begun. They are transitioning from a speculative market to a strategic security market, similar to the Cold War stockpiles. This means the bearish case for silver is mathematically impossible. You cannot bid against a price that is backed by the infinite liquidity of the printing press. This is the arbitrage of a lifetime. You are staring at a momentary anomaly, where the price on your screen is still suppressed by the old algorithm, while the new government floor is being constructed underneath it. The window to acquire assets at these fictitious prices is closing rapidly. Once the Critical Minerals Act is fully operational, the premiums will skyrocket and the metal will vanish into strategic reserves. The New Longs know this. The Swiss refiners know this. And now you know this. The government has joined the squeeze. The rig is in, but this time it is designed to send the price to the moon.